Welcome to your workshop today and the AC Day 1, your first day at Algonquin College. So it's really cool to see that everyone's here for Investing Basics 101 and that you're here for your fall semester. We have a great day planned for you. Lots of events going on and workshops that you guys can engage with and connect with each other. And if you go to our website for the Algonquin College orientation website, you can see all the different workshops that are happening and sign up, and Kelly will post the link in the chat for us. So I'm Sophia, I'm the events manager for Algonquin College. And before we get started, I just want you guys, if everyone can mute themselves, it just helps with the whole presentation and the way it goes. And I'll give you a couple of housekeeping items, anyone who's not familiar with Zoom quite yet. So keep yourself muted during the presentation. If you have a question, you can definitely use the chat function. I'm going to take a look throughout the presentation, and I'll let the two presenters know if there's like a burning question that we have to answer right away, or if we should leave it to the end and have more of a formal kind of Q&A. So don't be shy. There's no dumb questions here. I was just saying before we started, it's so awesome to see that people are really into wanting to have a better understanding of how to better invest, or where to put your money, or any of the basics that you may not be aware of saying, I maybe should have done that in college when I was there. But learning at any time of life is good too. So before we get started, we always have the gifts. That's just like the fun way we roll. So we have 2 gift cards to our campus store called Connections. So that will come in handy if you have a couple things you still need to buy. And the way we're going to do this is we're going to use the chat function. So if everyone can open up their chat, in a couple seconds, I will count you down. So don't press send until I count you down. I want you to write the answer. So think about this, and don't think too hard because it's a fun question. What would you buy if you won $1 million? So think about it. And in 3, 2, 1, put it in the chat. Oh, I see some investments, pay my bills, stocks. You're in the right segment. That's good. Look at you guys. That is hilarious. Mutual funds, a car, house, condos. You're all responsible humans. Is it bad that I just want to go on a trip around the world and blow it all in a year? These are awesome. Okay, great. So Kelly, our facilitator, is going to pick 2 random names, and it's totally random. And then she's going to private message you, and we will mail those gift cards to you. Okay, so thanks for coming. Okay, so now we're going to get started. So basically, if you have any questions throughout too, just so you know, Kelly, if there's any Zoom or tech questions, Kelly can help you out. So our 2 facilitators today is I'd like to welcome Terry and Joe from Avisa Wealth, and it's a national integrated financial service company serving wealth management needs to Canada's credit unions, as well as a range of independent financial organizations. So basically, Terry and Joe, with their extensive background, Terry is the regional director, and Joe is the director of sales. They're going to walk you through and give you insight to education experience they've gained over the last couple of years, and help you invest or give you some insight of how you can invest your money, and the practice of like the mutual fund investment, segregated funds, retirement income planning, and different ways to achieve your goals. So it's a very casual talk. Everyone, if you don't have coffee, it's 9 in the morning, grab your coffee, and I'd like to introduce and hand it over to Terry and Joe. Over to you.
Thank you very much, Sophie. Really appreciate it. Thank you, Kelly. Thank you, Michelle. We really appreciate the fact that we can actually present to you. We want to be interactive as possible. We want you to learn more about investing and hopefully earn more on your investments as well if you already have investments. So I'm going to start off by sharing my screen and showing you our first slide here. So can everyone see the slide? Yep. Okay. So we're going to do investment basics workshop on stocks and Q-Trade online brokerage. Myself and Joe, together we have a total of 40 years of experience within the industry. So as per what Sophie said, we want this to be as informal as possible. So if you have any questions, please feel free to ask. And we want this to be fun and interactive. So I'll start off first with, many of you probably know Warren Buffett. He's one of the most iconic investors of our time. very successful at what he does. We thought that this would be a very good quote to start off with. He has many quotes, but this is probably one of the better ones to start off with. The best investment you can make is an investment in yourself. The more you learn, the more you'll learn. So what we want to do today is, first off, we want you to learn more about investments. And that's the most important thing. But hopefully also, if you already have investments, you can also learn to earn more on your investments. So I'll go through the agenda for today. We'll go through what are investments. So we're going to look at mutual funds, exchange traded funds, and stocks. We'll give you a brief description of each. We'll also go into how can you invest in the market. So we look at a financial advisor versus an online brokerage or do-it-yourself investing. Joe will go into tools to help with stock picks. So he'll look at 2 tools that we actually use to help with picking stocks. And then Joe will go on to an online brokerage platform, and he will show you tools as well that can help you with any investments or picking your stock investments. So we have a poll question. First off is how knowledgeable are you around investing? So we're going to say very knowledgeable, somewhat knowledgeable, or limited knowledge. Oh, so most of you are limited knowledge. This is great. So this workshop will definitely help you with more knowledge around investments. So I start off this slide with digital disruption. So a lot of you are aware of a lot of the companies that are on, or logos that are on this particular slide. They've disrupted the way that we live our day-to-day lives. And in finance, which is integral to our day-to-day lives as well, digital disruption can help a financial advisor run his financial practice a little more efficiently, and also empower customers to make financial decisions in an intuitive, client-friendly way.
Terry, if I can jump in here, it's Joe. Just
sure,
I think one key takeaway from here is, if you look at kind of the way we interact today, every day, by listening to music, by ordering food online, by communicating over social media apps, or even watching TV for that matter, what we're trying to illustrate here is technology is evolving, and it keeps changing rapidly, and it's creating really a more integrated component of our day-to-day life. And I think that that's important for us to embrace. And I think you guys are embracing it by today. Even just learning a little bit more through our technology, Zoom, given the environment that we've been in, is very important for us to kind of adopt. And traditionally in the industry of finance, it's traditionally been a certain way for so many years. If you go back to kind of how your parents used to invest, they work with a financial advisor, they would do those meetings or those review meetings. It's all paper-based, and it's kind of evolving now, and technology is starting to embrace and kind of do everything that we do. I always joke around saying, I don't know if many of you have that newer technology where you're able to see inside your fridge. One of my friends just recently bought that, where you're able to take a quick snapshot of what's in your fridge rather than writing out a grocery list. I'm the type of guy that writes out that grocery list and then I forget it in the car before I actually go into the grocery store. So you figure that's a huge advantage of leveraging one industry with what we're doing and how that's incorporating. And there's no difference with what we're trying to do today and what you guys are trying to learn about with is how do we incorporate technology with financial planning.
Thank you very much, Joe. So first we're going to go into what are investments. So I'm going to give you a brief description of mutual funds, exchange traded funds, and stocks. First, we'll start off with mutual funds, which are probably the most common investment solution that a lot of people use. So mutual funds basically is a pool of money that's put together with many investors' money, and we purchase stocks, bonds, and other securities to create a portfolio. Then we look at exchange-traded funds. Exchange-traded funds have been gaining in popularity over the past couple of years. And exchange-traded funds are a basket of securities designed to offer exposure to a certain segment of the market. Most exchange-traded funds track an index. Both mutual funds and exchange-traded funds, a large part of the solutions that they make up are made up of stocks. And stocks are a single security that signifies ownership in one company and represents a claim on the company's assets and earnings. So the majority of stocks trade on stock exchanges. In Canada's case, it's the S&P TSX. And the way that you as a consumer can buy stocks, there's two avenues. You can go through a financial advisor, or you can also go through an online stock broker or an online brokerage. In terms of an asset class, stocks have historically outperformed most other investments over the long run and are a good hedge against inflation. So just because stocks have done really, really well in terms of performance over the long run doesn't mean that you just put all your money into stocks. As you can see on this particular slide, from year to year, you don't know which asset class will do well. So it's always a good idea to diversify your portfolio in different asset classes to reduce risk and also take advantage of market opportunities.
Yeah, Terry, if I could jump in here, I think this is
Sure.
back on the side. Yeah, hopefully you guys can hear me better with my mic. Is that better? You guys could probably add in the chat. I know that was a little bit of a muffle, but hopefully it sounds better. Awesome. So I just wanted to kind of highlight the main point here is there is no crystal ball when it comes to investing. There is no perfect recipe. This is a great chart to illustrate, as you can see, over the last 20 years from 2005 to 2019. It's hard to predict, and each one of these are different asset classes, as you can see outlined in the legend on the bottom, of different asset classes. And while we can't predict which asset class is going to be the best performing asset class, oftentimes some people will think, well, we'll just chase the winners. Whatever did well last year, we'll invest in that and it'll do well for us this year. Or vice versa. People will often think sometimes that, hey, you know what, I'm going to pick the losers because I know they got the biggest opportunity for a run up. And as you can see by this chart, it's virtually impossible to do that. So what we want you to focus on is not chasing winners or trying to chase losers. What we really want you to focus and identify, as Terry mentioned, is not to put all your eggs in one basket, but really participate in areas or sectors of the market that number one, interest you, and number two, that you feel comfortable with, because I think that that's important. And by having a well-diversified portfolio, it'll reduce the risk and give you the opportunity for a maximized return.
Okay.
Go ahead, Terry.
So as you can see here, actually just adding on to Joel's point, leveraging Joel's point, when you invest, whether they be mutual funds, exchange traded funds, or stocks, you want to be diversified. Diversification, again, helps with reducing the risk in your portfolio. But more importantly, what diversification does is you can take advantage of market opportunities to buy asset classes that aren't doing as well during a certain market run. So to this particular slide, don't put all your eggs in one basket. It's good to diversify across different asset classes so that you can earn stable returns over the long run. Anything you want to add there, Joe?
I think this one is just what we want to illustrate here is definitely there are multiple and different ways to invest. So mutual funds would be one way, ETFs would be another, and stock investing. While no one is more popular than the rest, if you think about kind of where the industry has been over the last 30, 40 years, originally it was everyone wanted to get into stocks and investing. Over the years, then people got out of stocks and wanted to move to mutual funds because they thought it was a more focused, a more balanced approach, an opportunity to actually meet your needs. And now there's been an introduction of even further products of ETFs, which have been kind of a low cost option to focus on investing. So while there is no different way, I hope this chart illustrates that, we want you to use a basket of them. We don't want you to throw all your money in the stock market. We don't want you to throw all your money into mutual funds. We don't want to throw all your money into ETFs. Having a balanced approach, I think, really looks at a way for you to protect. And again, it comes down to comfort level and what you're interested in. And hopefully this illustrates that.
Now we'll go on to how to build a portfolio. So there's 5 key steps to building a portfolio. First off, you have to know yourself. So what are your goals? Either short, medium, or long-term goals. Once you understand what your goals are and what your objectives are, know your investments. So I discussed before how stocks historically have outperformed other asset classes. So if you're looking at long-term investments, maybe you want to diversify in stocks more in order to have better long-term returns. Diversified portfolio risk. So we discussed diversified portfolio risk, which is don't put all your eggs in one basket. Basically, when you diversify your portfolio risks, you reduce your risks in terms of your portfolio, but you also are able to take advantage of market opportunities when they present themselves. Conduct regular reviews. So you want to be able to conduct reviews of your portfolio on a regular basis to make sure that your portfolio is aligned with whatever your goal is, whether it be to buy a car, buy a house, go on vacation. You want to ensure that you conduct regular reviews to ensure that you're on your where you want to be in terms of your goals. Rebalancing your portfolio. So rebalancing your portfolio, you have different investments in your portfolio. You want to make sure they're rebalanced to align with the goals that they're in your portfolio for, but also to take advantage of market opportunities when they present themselves.
Terry, if I can jump in here. Yeah, so Terry, if I could jump in here, I think there's 2 things that get missed here on this. When you're building your own investment portfolio, ideally the first 3 are kind of given. You know yourself, know your investments, and try and diversify your risk. The last 2, 4 and 5, they seem to be forgotten. It's kind of like when it comes to investing, some people, they set it and forget it. And what we really want you to do is focus on that. Actually, if you take away from anything from today's presentation, is really focus on conducting regular reviews because of 2 things. Number 1, things change. So we want to make sure that you're able to address and align and move your portfolios to match your risk, whatever that might be. Rebalancing your portfolio is just as important so that you're focusing on making sure you're trimming off the profits or locking in some of those gains, or taking advantage of opportunities that might be in different sectors that you want to participate in. So oftentimes those 2 get kind of overlooked. So I want to make sure that you guys really focus on honing in when it comes to portfolio management, as well as with your own investment portfolio, to conduct those regular reviews of our portfolio and rebalance so that you can, as the first question came out, what would you do with $1 million? Definitely take advantage of those opportunities. I know I saw them, a couple of them maybe chuckle, Lamborghinis, condos, houses. Someone said Algonquin College, which I thought was good. So great opportunities. So just focus on that, because I know that most of the time in our industry, the top 3 are kind of a given, and then we kind of just forget about it, and hopefully it grows. Conducting regular reviews and rebalancing, I would argue, is probably the most important when it comes to your investments. You just want to make sure you're doing it on track, losing or winning.
So how to invest? What we're going to look at 2 ways that most people invest, either through a financial advisor or through an online brokerage. We look at financial advisor first, since probably most of you invest through a financial advisor, through your bank or through an independent broker. But financial advisors, they work with you as a client, but what they do is they give advice tailored to your goals and objectives. Financial advisors also do financial planning and cash flow analysis. So they give a tailored, customized, more around hand-holding, more face-to-face. So they give more of a, they're giving their expertise to you in order for you to be able to meet your goals and objectives. And because of that, there's a medium to high price in order to have a financial advisor working with you. Joe, anything you want to add to a financial advisor?
You know what, Terry, finish off the slide and then I'll add a point at the end because there's a couple questions that came up.
Yeah.
Then we go on to online brokerage, or well, in this case, we use Q-Trade Investor. Now, because of the fact that you don't use a financial advisor, the pricing is a little lower. However, you take on the financial planning, you take on the cash flow analysis, you take on all the things that a financial advisor would do. There's a wider array of investments, so you've got to be knowledgeable about the markets, knowledgeable about investments, knowledgeable about seeing market opportunities. And again, we're going to show you later how you, as a consumer, if you want to do online brokerage, how we can help you with choosing the type of investments that best suit your needs.
Yeah, Terry, I'll jump in here. So question popped up on the chat, which is great. Newer methods versus older methods. So someone had asked a great question with respect to that. So traditionally in our business, the working with a financial advisor would be that older method, but not a forgotten method. I think there's an importance for the value of advice. It's extremely important. But it depends on where you are in your investment decisions and where you are in your horizons. As things change, as I mentioned, as your accounts become more complicated and you start building more wealth, you might want to work with a financial advisor where you have that more personalized approach. It's dedicated, it's focused, maybe a little bit more guidance on estate planning, taxation, eventually with retirees or your parents, let's say, as they start entering retirement. It gets a little bit more complicated when it comes to investing. So the way that I want you to take away from this slide is, definitely we have a do-it-yourself platform. So Q-Trade, which I'll talk to you in a few moments, is our do-it-yourself platform. Similar to Questrade, Wealthsimple, WealthBar, it is an online digital wealth platform where you're able to have that direct do-it-yourself approach to investing. And it's really done by yourself. There's no guidance, there's no support. Everything is done and initiated by you. And it's a great starting point where you feel free to get your feet wet in the investments. Working with a financial advisor, as I mentioned, traditionally is the way that we most do investing, but you're actually paying for that service and you're paying for that professional advice and guidance. Where working on that do-it-yourself platform, you're able to make your own decisions. You're able to focus on maybe something that is a little bit more of interest to you with making all the investment decisions on your end. And for that, you're paying a little bit less. This is not an old method versus a new method. Actually, to be honest, the only way people used to invest was through the stock market and working with a financial advisor at one point, where advisors would actually buy individual stocks or parts of companies for their clients. What's evolved from there is the opportunity now for you to do it yourself. And how that's evolved is actually through technology and us being able to leverage these platforms in the comfort of our own home or in our dorms or in our coffee shops around the world.
And if I can add something on Joe's last point is, this is the digital disruption that we're talking about. This is how digital disruption has become part of the financial industry. So now I'm going to look at the different type of online brokerage users. So first we have self-directed investors. I touched upon that a little bit before. These are people that are very knowledgeable about investments. They want control over their investments. They follow the markets. They know when market opportunities present themselves. So these are self-directed investors. They also are very fee sensitive. So they want to keep their own control over their investments, but they want to keep their fees low. And that's the reason why they do self-directed investing. You've got young investors, kind of the same. We look at young investors between 18 to 30 years old, kind of like self-directed investors. They want control over their investments. They're knowledgeable. They follow the markets. They really want to have a more assets or reduce the fees and keep money in their pocket. Then we have small percentage of assets. So those are people that usually they're older. They have a large amount of money with their financial advisor. I think Joe touched upon that, where you've got older clients that have a lot of money with their advisor, but they also want to complement that with investing online with a small percentage of their assets.
If I could jump in here too. I think it's really important for you guys to take away from this slide is it's not a one size fits all. There is no, you have to do it yourself or you have to work with a financial advisor. These are just medians to you being able to invest. The opportunities of where we see for each of these people is that if I go to the bottom of this where you see that pie chart, all I really want you to think about is whether you plan on doing it yourself now, think of that as a sleeve of your overall financial portfolio. And then maybe down the road, you've got other things that you want to introduce, such as segregated funds, which Sophie mentioned, and we're talking later on down the road. Maybe it's your registered products, like your RSPs that you might be working with a financial advisor about. There's different options that you can, but just think of this as maybe a sleeve of your overall financial portfolio. And that's a starting point, especially for new investors, for you to get a little bit more knowledge, a lot of homework, but at your own pace.
Yeah. Okay. So we're going to go into tools and capabilities to help you with your investment journey. Joe will be going through 2 tools that that you can use in order to help with your investment journey, and then we will go into the demo afterwards. Okay, so I'll give it over to Joe right now.
Yeah, perfect. Thanks, Terry. So one thing I want you to focus on is whether you're using Wealthsimple, Questrade, WealthBar, or any of the online platforms. Today's presentation is really focusing on that component, on the actual online brokerage side, because we really want you to focus on getting your feet wet. I think there's an abundance of learning that you can do at your desk. There's an opportunity for you to dig a little deeper. And most of the platforms nowadays, especially online, are a great learning tool and resource for very low cost. Oftentimes, as I mentioned, when working with an advisor, there's 2 things that they're going to actually want. Obviously, they're going to want for you to have assets, and maybe at this particular time, we're still growing or building that up, so we don't have that particular amount of assets that they would be willing to take us on as a new client. And secondly would be a lot of them will pay a fee that might be a little bit higher than what we were expecting to pay right now. So these platforms, online digital brokerage platforms, provide that opportunity for you to learn, educate yourself without taking on as much risk or taking on the risk that you're comfortable with. So I think that that's important. But there's an abundance of tools, and I'm just giving you, I know we don't have a lot of time to go through these, and by any means they are extremely involved in getting it. There's a huge amount of information which I'm going to show you when we go through a demo of our online brokerage platform. But really the opportunity for you to use these calculators and tools and really focus on, as I mentioned, minimizing risk but maximizing your return. So here's an example of a snapshot slide that we took from our tool that we have, which is called Portfolio Score and Portfolio Simulator. They're 2 tools that we recently added, and these are free once you are online with our brokerage, where you're able to incorporate maybe your existing portfolio. Or I always joke around and say, let's say you're at a family barbecue and you're hearing about your uncles that are talking about, or your uncles and your aunts that are talking about some companies that they're looking at investing in. And there's an opportunity for you to maybe want to take a closer look. But you don't want anybody to know, because at the end of the day, you don't want anybody to know that you have money's hidden somewhere. So you might go home and take a look, or maybe pull up your mobile app and just kind of plot and play and put these portfolios or put these companies or these funds together and see what they look like. And here's an opportunity for you to kind of take a look without having to make an actual purchase. So the idea around this calculator was really to score your portfolio based on the risk. So if you go back to what we talked about when you're building a portfolio, is know yourself, identify your risk tolerance. Sorry, Terry, yeah, and diversify your portfolio risk. If you go back to the portfolio slide, Terry, what we want to do, and here's an example. So let's say you hear about these companies, you want to take a look at them, but not really necessarily make any options or make any decisions around buying or selling immediately. You can run them through this calculator or this portfolio score, and what it will do is look at 4 different dimensions. It'll look at downside protection, diversification, lower fees, and performance. So this entire process is actually done through a risk questionnaire that we fill out, or that you fill out, and it'll identify your risk. It'll try and diversify for you, and it'll provide the fee options as well as the price, and be able to kind of view what this portfolio looks like. It'll then score that portfolio based on the annualized returns, and obviously the higher the performance score, the better the opportunity for your return. But it'll also help with the downside protection. It'll score that and give you a score that will hopefully you'll feel comfortable with, to make sure that it limits the amount of losses potentially you can. Now, it's not guaranteed, obviously, because this is a simulated process that we're offering, but it does give you a better sense for you to make a calculated decision rather than just buying or selling a stock on an individual whim. Okay. Once you do that, if you go to the next slide, Terry. Once you do that, once you've actually put those together, you can then run that sample through a portfolio simulator, which basically just gives you a portfolio score of maybe the portfolio you had built already versus the new scenario, and then looks at 5 different dimensions if there is an income component, but it looks at downside diversification, income, as well as the fees, as well as prices, performance. And then you're able to instantly make that decision to either take a look at that portfolio, monitor it, make some revisions, add or subtract. As you can see here, we took out Suncor from that quote and actually went from 5 individual companies down to 4. Hopefully that improves that score. And then actually either save that portfolio or make those changes with your existing portfolio. Okay. So what I want to highlight is when you're investing for yourself, you have a number of tools that you're available to. You have a number of resources through our customer service lines that are available for you where you're able to help with those decisions. So by no means are you just to do this alone. There's a huge opportunity and abundance for learning, but there's also an opportunity where you can run these sample illustrations so that you can make decisions, calculated decisions before you fully invest into an individual portfolio. Where in the past, you might not have had that feature. Now, as technology is evolving, you have the opportunity to either modify or build off a simulated portfolio, and hopefully that ever helps.
Joe, we just have a quick question just while I have you on the slide.
Yep.
Students are just asking if you guys are going to cover just the difference in the platforms like the Wealthsimple or Qtrade and then the Robinhood.
So very good question. I think that's a lengthy discussion in every aspect. There is a lot of competition out there in the marketplace, but I will address one thing that I think is important. We don't really care what platform you use. At the end of the day, obviously we're illustrating ours because we understand ours and we're familiar with ours, but there's 3 key things that I think are important for anyone on the line that's actually interested in investing in online investing. Obviously you're hearing about, like I'm sure you guys have heard about affiliate marketing. Right? Affiliate marketing is where you're able to basically companies will pay people for advertising and scoring, and that'll help catapult them to being the #1 search on most search engines. That's one component of where you're seeing and why you're always seeing kind of the bigger companies in Canada like Wealthsimple and Questrade attract some of that. They spend a lot of money in advertising, a lot of money. Some would argue maybe unsustainable money. But whether it is or it isn't, there's 2 things that I think are important. Number 1, understand the fees. Okay. While many are toting around lower fees, there's a lot of hidden costs. So I'm showing you an example of calculators. If we were to go to those other platforms, you'd have to be paying additional costs for these calculators and the researches that we'll be providing. So make sure you know what you're getting for the fee that you're getting. You're going to make sure that you have access to the research that's not an additional cost. So oftentimes they'll say, yes, your trading fee is $4.95, but you have to pay for your own research. You have to pay for individual calculators and assessments. You'll have to pay for analyst research, and it starts to add up. The second thing that I think is important is some of the platforms trade with a 15-minute delay versus a real-time trading. So depending on how important that is to you, do you want real-time trading or do you want, real-time trading and real-time pricing versus a 15-minute delay? It really depends on the individual. Some are completely against the 15-minute delay and want real-time trading, and some don't. And again, these are all differences that I think is very important. So transparency is very important. Make sure that you know what you're paying for. The fees are extremely important in knowing what you're getting. And then I think the last thing that everyone should know is, although a lot of these companies are coming to this platform, there is a huge opportunity in the market for this particular space as it's continually starting to grow. The one thing that I think you need to remember is there's a whole bunch of back office operations that are important. And I've heard through my dealings and through Terry as well, when you're dealing with platforms, you want to make sure that their back office is as easy and as quickly as possible to deal with, because oftentimes, let's say you need one of the questions came up, I think, earlier in the poll, where you're going to be looking to buy a house. Houses have specific closing dates. Lawyers have to get involved. There's specific closing dates that you need to meet. There's a whole bunch of bank requirements that are required. I've heard in some cases, let's say you want to use your online brokerage account to put down as a deposit. Oftentimes, if you're dealing with some of those companies, it might take up to a 15 to 20 minute delay for you to actually get the process in, and then it could take up to 4 weeks to actually get that transfer to come over. So think about matching that timeline with the expectation of the processing time. There's a lot of things in the way that might actually focus on, not actually benefit you from making sure that you're getting your investments and your money when you need it. So not getting into a battle between who's better and who's not better. I think there's a lot of research online. There was a Rob Carrick article, if you guys read the Globe and Mail, that did a great comparison of all the online brokerage. We can forward that to Sophie, and maybe Sophie can send it out to the team. It's a great analysis. All I would say, and I think Terry would agree with me, just do your homework. Make sure that you're understanding what you're getting for the price that you're paying, and then what's involved. The last one that was mentioned was Robinhood. Robinhood's not in Canada yet. And again, I don't think when you look at the banks in Canada, we're extremely regulated. It's not as the US model is. So it's extremely different than it would be here in investing. There's a lot more regulatory bodies that have I guess their hands in the cookie jar. So I think it's important for you guys to understand that it's probably not going to be a similar apples to apples that you're seeing maybe in the US, or when you're watching TV on some of those commercials that you're seeing. It's not going to get to that point probably anytime soon. And hopefully that helps address that.
There are a bunch of other questions, but what I'm going to do is I'll let you guys finish the presentation because they're so diverse, and then we'll just hammer them out.
Okay. Joe, so we'll go on to the demo, okay?
Yep. So as Terry's bringing something up, he'll tell you. So ideally what we're doing is just going to show you a couple of the key things that we have available on our platform. And I'll reiterate what we were talking about. It's just kind of what you're getting for the fee that you're getting. So just make sure you're getting that transparency. I think that's extremely important in knowing what you're paying for. Not only the trading fee, because think about it, if you don't have the research, then the trading might either hurt you or help you. So it really depends. Ease of use, I think, is another thing that if I'm sitting in your shoes, something that I would want. Terry, go back one slide, please. Or one tab.
You want me to go back on this one? Okay.
Yeah, the opening slide. So I've been seeing a couple of the
Which one you want to go on, Joe? Which one?
The first one. No, not first slide. Sorry. When you're on the website, just go to the main page. As you're looking at that, I noticed the chat's been coming up. I know some of you have invested, which is great. Some of you have started with different companies, which is fantastic. Yeah, log in now. Some of you have actually gotten your feet wet, which is great. I think that's important. So there's a couple of good things that I think are important when you're looking at that, and I'm just skimming through it, so forgive me. There's a lot of them. I'm glad you guys are communicating through this. I think it's a great platform for you guys, and thank you to the team for setting this up. As we mentioned earlier, if there's specific questions that maybe you want to ask privately, we can try and definitely help. There's also a 1-800 number that we have available if you do want more information on Qtrade or different platforms, and I will send out that Rob Carrick article that you guys can take a closer look at. Okay, so yeah, perfect. So now one of the things that we have is an example here to show you an online trading platform that obviously we're familiar with and that we deal with on a daily basis. But as you can see, what we're trying to do is with our platforms, even though it is that do-it-yourself approach, it is really about what Terry mentioned earlier, is the best investment you can make is in yourself. And really focusing on learning and being able to focus on the ease of use, especially when it comes to these platforms. I don't want to go into a platform having to do everything myself and not know anything or where to start. So a lot of the programs, I know us in particular, we have an opportunity for you to actually create a trial account. So it's a dummy account where you can actually go through, play around, fidget around with some of the tools, but not actually really trade. But go through a buy, go through a sell, go through using maybe some of the research tools that we have available. In the interest of time, I'm going to highlight a few things today. I think it's important. But really what I want to focus on this main page is really highlighting, highlighting quick level. When you open up, whether it's on your mobile app or on your computer, just a quick snapshot. Most people really want to know, what's my portfolio doing? So as you can see in the top left-hand corner, your portfolio progress, whatever you might have put in, and then, basically if it's gone down or gone up, that's really all most people really care about. But we can get a little bit more granular as you start focusing, and scroll down a bit, Terry, not too far. What your composition of your portfolio might look like. You can do a quick quote. So if you notice in the top right-hand corner, go up, Terry, a little bit. A little more. It's broken down in three kind of areas. So what the indices are doing, so you can compare kind of what's going on in the market if you want to take advantage. Obviously, you can see in this particular illustration, the TSX is down, the Dow Jones is down. Maybe there's opportunities for us to look at some specific companies. I talked about earlier, your aunt or your uncle that might have been giving you a company name. You can do a quick search on here. And again, this is all available through your mobile app. So hopefully if you know the company name, you can pull that up and be able to take a quick look at what the company looks like. And I'll show you that in a little bit. If you go under all these tabs, so the layout of most of these is really to create some effectiveness, but also to create an opportunity for you to learn. So you'll have a number of drop-down menus. You can see here, my accounts, trading options, quotes, market info, investment tools, research, and education. If you click on my accounts, for example, you'll have a whole opportunity to drill down and dig a little deeper. We talked about commission-free ETFs or ETFs. We have an opportunity for you, and this is a great starting point too if you want to get your feet wet and not pay any additional fees. You can see here, in most of the cases, when we talked about an educational platform, we want to give you an idea of what does commission-free mean? What do ETFs mean? Where do they fit in? And who are we using? So it's an opportunity in most of our platform where you'll have an opportunity to have a quick overview of what the program includes. And then if you go to eligible ETFs, then you'll be able to even pull down a drop-down list of ETFs that you can buy that are commission-free. And that's what I want you guys to look for. So when we're looking at opportunities, what am I getting for what value am I getting for what I'm paying? What opportunities and tools and resources do I have? And is it fully transparent and understandable and easy for me to use? I think that's extremely important for you guys to take away from today's meeting. Okay. I'm going to skip trading options. If you can go to, actually, if you want to go to market news, so our market commentary, either or. So oftentimes we talked about those additional fees. So this would be an opportunity for you. In our fee, we include all of our research, no additional cost. So as you can see, whether it's top trending news, we're pulling from different resources and being able to focus either on Canada, the US, or overall in the globe, and really be able to kind of identify and drill down. If you go to investment tools, we talked about, sorry, go up, Terry, basic watch list. We talked about if you're building, and necessarily we want you to use this as a tool, as a resource. So you can create watch lists, maybe advanced watch list or a basic watch list. And if you want to click on that watch list, click on that here. Is it not pulling up?
Yeah, Joe, it's frozen. So.
Okay. So in essence, when you're creating a watch list, all I want you to focus on this or take away from this is, let's say you want to focus on, I don't know, cannabis stocks. There's a number of cannabis stocks. It's been very popular in the last little while, but we don't necessarily know which one we want to buy. So we want to be able to track all of them. And if there's an opportunity for us to buy at a price that we're comfortable at, one of those particular cannabis companies, that's an opportunity for us to do that. Utilities might be another example. So I can classify my areas by what sector I'm looking at, whether it be banks, whether it be utilities, whether it be telcos, and the opportunity for you to really look at pooling those together and be able to invest in those and make those decisions. Can you go to investment tool again? And I'll end off on value. So we talked about portfolio analytics and calculators. Go down to the bottom, Terry. And these are just a few to share with you. If you remember those two slides that I mentioned earlier, it's an opportunity for you to actually run through the portfolio simulator. And I apologize that it's taking a little bit to come up. But really, based on your answers and your questionnaire that you'll fill out, gives you an idea of your risk tolerance. You'll be able to then run it through this portfolio simulator to see what it would look like, and it'll then give you that portfolio score that we talked about earlier. Okay, Terry, if you want to go to research. So as you can see, you have a number of analyst recommendations, technical research. One of my favorite on this platform that I think gets underutilized. You've got access to Morningstar. You can focus on you're incorporating your calendar, so being able to track buys and sells. But I think this is the one that I use quite a bit, especially in explaining and giving an opportunity for you guys to get a better snapshot. Again, when you look at some of the other platforms, all the stuff that you're seeing here, you might have to pay additional costs or features for. But let's say, and I'm going to use a couple of examples. Let's say before COVID hit, I'm sure many of us have been binge watching Netflix. So you're sitting on your couch, you've gone through the entire lineup of Netflix. You want to just see how it's trading because you figure, hey, everybody's at home. They're probably gone through the entire lineup. You can quickly pull up Netflix here, and you can see, what it's trading at. This is a great snapshot just to see don't go too far, Terry. Where the company's trading at, what it's doing. So as you can see, it was trading at $516. I don't know if I'm going to pay $516 for one share, but I really want you to focus on, okay, this is a primary business. It's been eating up a lot of regular cable and regular opportunities for us to participate in this. What I like about this is when you right in the middle, you can see, is this a good buy? Well, you know what, based on our projected value, it's currently overvalued, even though it is still growing. You can see that. And I've seen this at one point where it was actually at fair value or undervalued, which is a great opportunity for us to have bought in this company. But right now, necessarily, it might be an overvalued play. If you want to dig a little deeper, you can see there you got revenue and earnings history, so you can see what it's been doing, what the value has, whether it's been fair or low. And if you go down further, Terry, this is probably my favorite one. If you go a little bit further down, Terry. So price history on the bottom right-hand side. So as I mentioned, let's say, you can see it was trending around $300 or less than $300 in October of 2019. Slight increase as we were heading into 2020. At the end of the March or the beginning of March, you could see a significant drop. And that's definitely when the pandemic hit. A lot more people were not focused on watching TV as much as figuring out what was going on in the environment. But then since then, you've seen the later months from April, May, June, July, a huge and steady increase, which is a great way for us to kind of identify what do you think this is going to do as we move forward, and you're able to track it and identify it. And again, this is all research that's available at your fingertips. It's all stuff that I would say take a closer look at, regardless of what platform you're looking for, and really focus on, maybe companies you're looking at. I'll use another example just to kind of show you. So, all flights have been grounded. Air Canada is our major carrier for Canada. So I'll often look at, okay, well, that's an opportunity. Maybe it's an opportunity that, just put AC, the ticker symbol. It's an opportunity for us to kind of take a closer look at maybe, eventually people are going to be traveling again. I'm sure many of us are going to want to go on vacation. So it's a great opportunity for us to take a little closer look at maybe an investment opportunity like Air Canada. It's been bailed out once, if you remember originally. So here's an example. Canada's Air, just a brief little synopsis. Air Canada's largest airline, generally serving 50 million passengers. What the revenue is for the company currently is undervalued. So at $18 a share, at one point it was up to $50 per share. You really focus on the opportunity for us to kind of focus on building that out. And incorporating this maybe as an opportunity for us to either buy or hold or build it into our portfolio simulator that we talked about earlier. If you go back to that one of my favorite chart on the bottom here, over the price history. No, go down, Terry. The price history up a bit or down. Or a little more. Okay, so as you can see there, that price history over 1 year. So October of 2019, we were trending around $50, and then we saw a significant drop in Air Canada shares as all air transportation has been grounded. So we've seen a steady uptick, but maybe it's an opportunity. And there's hundreds of stories of companies that you might be interested in, or that you might get focused on in conversations, or get included in conversations. Ideally, this is a great opportunity. And as I mentioned, there's no additional fee. So make sure that whatever platform you're looking for, you have the research to do your homework. You have the opportunity to be fully transparent. You know what you're getting. And then more importantly, do your research. Don't necessarily just buy into whatever you're hearing. This is a great starting point because I think you have a lot at your fingertips, where in the past, many people used to go to an advisor and pay for all this research and these diagrams that you're seeing today, where now it's accessible at your fingertips. Last thing I want to leave you with respect to this, if you go up, Terry, to the top. Terry, just scroll to the top. So the last tab is we talked about, and I think the first point was an important one. There's a lot of people that have limited knowledge when it comes to investing, and that's not unusual. I think Algonquin College is doing a great job of actually starting this and really helping you focus on this in the early on stages of your educational career. And I think it's important because if you start off early, you'll have an opportunity to understand and get better when you're building. What I think is important is whether you're limited, have somewhat more knowledge, or you're very experienced, this is a great resource for you to leverage. And it's just an education center so that you can actually focus and drill down as deep as you want and understanding what's available to you at your fingertips. Be able to understand, what does technical research mean, for example, and how do I leverage that in my discussions? Or how do I base that when I'm building my portfolios or my recommendations? I think that's extremely important in understanding. Yes, you're going to have to do a little bit of homework, but I think that's important. It is an investment. It's an investment in yourself. And that's why we set that tone at the beginning, is that, this is an opportunity. By no means, as I mentioned, does anyone have a crystal ball? No means will you get it right 100% of the time. But there is an opportunity for you to learn, build, make more calculated decisions so that you minimize your risk. However, it is a process that you'll have to invest in. And if you do choose to do that, the other option is working with an advisor, where that person is able to provide you with that professional advice. They're taking that work off your plate and helping you plan and set your goals to make sure that you maximize your portfolio. Okay, so there's multiple options. It's not it has to be done this way, it has to be done that way. It's really an opportunity for you to say, hey, I want to try this, I want to learn about it, I want to understand it, so that even when I do get to working with a financial advisor, I understand what he's speaking about, or he or she is speaking about, and really understand that this is what I want to do, have a little bit more input, as opposed to just giving all control or full control of your portfolio to a professional. Now, as a result of going into this, I'll hand it back to Terry. And Terry, if you have any questions, I don't know if you want to open it up now, or
Sophia,
I'll give it back to you, and then you can kind of focus on that.
Yeah, Sophia, if you have any questions, I don't know if there's much time, but we definitely want to go into some questions if
For sure. Yeah, we have about 5 minutes left. But here's my thought. I can download some of these questions and share it with Joe and Terry, and then we can kind of get some answers. You've answered a lot of them, to be honest, throughout that presentation. So that's great, Joe. I think the one that keeps coming up too is I know you mentioned this quickly, just again, knowing the lingo and the content before you even go talk to a financial advisor, so you have some sort of education behind it. But is there a sweet spot for a beginner? How much money do they need to get started?
Well, we have a young investors program where you can start with as little as $50 per transaction per month, basically. Okay. So there's no minimum. Well, yeah, $50 is a minimum, and a lower transaction fee as well. Sorry, Joe, you don't want to add to that?
Yeah, it goes back to what we talked about, is just knowing yourself, getting comfortable. I think is important. I think it's important that you do put something away, whether it's in a platform like this or somewhere. I think it's extremely important that you start now, because you think about it, you're going to be, doing your education, you're going to be working, you're going to have a component that has to go to your fees. And I know money might be thin at this particular time, but it's a great way if you can kind of carve off and have that discipline from now. It'll help you hugely as you start to build out. And then once you're done your programs, hopefully have a nice cushion for you if you can commit an opportunity to be committed. It's like working out. The more you work out, yeah, obviously you're seeing more results. Same would apply, I guess, to your investments. I want you to focus on this. I think it's important. It's a great opportunity. I'm glad you guys jumped on board at 9 o'clock in the morning. As Sophia mentioned, it's important. By no means is this everything you need to know about investing. There is so much. It is an abyss of information that you can get. However, there's a lot of tools and resources and information that you can get out there that I think you need to focus on. I would just say, try and make sure that you keep it simple for you, easy to understand, and ask as many questions as you can. There's a lot of people that have been in the industry. There's a lot of expertise that's out there. I'm sure at one point or another, even leveraging your parents for a discussion would be huge. Your parents' advisor for a discussion. There's a lot that you can learn from a lot of people, and I think that's the one thing that I'd say: don't take that for granted. You interact and network with a lot of people that can offer you a lot of advice. What you do with that is what you choose then.
And I think also I want to add that the younger you start, over the long term, the more compounding. So start with a little bit, and you'll see over the long term that will turn into more than you thought. So yeah, that's what I leave it off with.
That's good. And what we'll do is we will send everybody your website. So in addition to some of those questions that haven't gotten answered, we'll get those questions answered, and then give the resource of your website if they want to contact you afterwards. You guys can then set up a time and meet or some discussions. Does that work for you, Joe and Terry?
Definitely. No problem.
Okay.
Anytime.
Awesome.
Anything we can do to help.
Okay, great. That's great. Okay, well, I don't want to go over time, but I just wanted to thank Joe and Terry. That was super insightful. I think you really laid the groundwork. I know sometimes it can be overwhelming. There's a lot of like lingo and dialogue, and if you're really a beginner at this, you're not really sure where to turn. So I think having your insight was super helpful. And then again, that resource as a website, and to have that further discussion after this workshop would be beneficial to everybody who's here today, and share it with a friend, because I think this is really important. That the younger you start, the better off, like Terry said, that you are later on, investing your money and not being like me and wanting to take my $1 million and spend it on a trip around the world. So before we end though, we have those two winners. So Kelly Singer, our facilitator, do you want to announce who the winners are for the Connections gift cards?
I would love to. So the two winners are Kaylee Bates and Harman Singh. So I've reached out to these two via the chat, and I've got their email address. So we'll reach out to them that way and get those gift cards to them.
Yay! Virtual clap, great. And then don't forget to check out the other workshops that are happening on today. And there was some dialogue in the chat. If this session is recorded, it is recorded, and it's going to be posted on the orientation website. So again, if it was like a lot of information, no problem. Just head back to the orientation website, and you'll be able to view it later this week. So thank you so much, Joey. We're on first. We're
That's awesome. Yeah, I love it.
Joe and Derek. And enjoy the rest of your day, your first day at Algonquin College. Thanks so much very much.
And thank you again, Sophie, Kelly, and Michelle. Appreciate it. And everyone that joined.